Hello, this is Jeremy Wagner of Daily FX Education, and I'm here to talk to you about Elliott wave and how I use that in my trading. Now, Elliott wave is a controversial subject, and it garners a lot of attention. And I think a lot of people get interested in Elliott wave because it has very hard and fast rules. If you've seen our other videos, we've taught to you what those rules are, and so a lot of people get drawn to that because when we're learning something new, we want to know very rigidly what is it we're supposed to do. And of course, as you know, in real life trading, it's very subjective, and that's what makes it difficult. That's what gives people different opinions, and that's what creates the market. So the rules is what draws people into Elliott wave. But the challenge with Elliott wave is that when you're looking in the past and you're looking at a chart and you're like, oh yeah, there's 5 waves up, 3 waves down, an obvious trend. It's very easy to look in the past and see Elliott wave in action. But it's very difficult in real time. When you're looking at a chart and trying to anticipate the waves, it's very difficult to be able to generate trading opportunities based off of that. And that's what I want to show you in this video. And actually, I'm going to be sharing with you one of my most favorite trades that I have, and it uses Elliott wave. And so I've got listed in here an uptrend, and then we're doing a retracement. And so the most favorite trade that I like to use is the 78.6% rather, retracement level. And I'll have that set on all my charts. And so I'll go through my charts and I'll look for a nice trend up or down, doesn't matter. And then I look for a deep retracement of that level. And you see, there's a couple of reasons why I like this trade. Now remember, when you're using Elliott wave in real time, you really don't know what the market's going to do. You're just anticipating what's likely to happen. And so if I'm seeing a 1, 2, and anticipating a wave 3, because you remember in the other videos that we have in this course on Elliott wave, we talk about wave 2 usually retraces 50 to 78% of wave 1. And so I'm looking for the bottom end of that range. And so 78% is actually a very important fib level because a lot of traders, it's rather unknown, but a lot of traders will use that as the point of no return. And so if the price comes down and if it starts to retrace lower than the 78%, a lot of traders give up and they say the trend is over and they don't do anything else with it. So if it comes down and if it finds support, then you're offered an excellent risk-reward opportunity. Let me illustrate this a little bit deeper for you. So let's say we've got, here's our up move, and so we retrace, and let's say you don't quite make it in at the 78% level. Let's say you get in at the 75% retracement level. Well, look here. Here's your risk on the trade because you're going to want to place a stop just below the low here, and here's my potential reward. And so I've got a 1 to 3 risk to reward ratio just by simply entering near the 75 or the 78% retracement level and just take profits at the high of this previous trend. And so you get an excellent risk-reward ratio, and even if you want to be more conservative and just do a 1 to 2, well, you can easily fit that in as well. And what I like about this is maybe I'm anticipating a wave 3, which would even make this risk-reward ratio even better. Even though I'm anticipating it, that doesn't have to happen, and I could still win out on the trade. I could have prices. Of course, they could work their way up into a wave 3 and move much higher, or prices may come up. They could do a double top. I would win in that trade as well. Or maybe prices would come up and maybe do some type of triangle type of thing. Well, I would win on that trade as well. So that 78% retracement level gives me a lot of flexibility. I don't have to be right on my wave count, but I can still be right on the trade. Now, this is an idealized move. This blue line here, this is an idealized move. We get a nice move up, a nice move down. If only it were that simple in the charts. Let me give you a couple of patterns that typically fill in on this form. So, staying with this uptrend, a lot of times what you'll see is that prices will make their way up, and then they'll do kind of this 3-legged move down. Remember, 3 waves against the trend. And so I call this the squished M. You see how it kind of looks like the letter M? And except for this part of the M kind of got squished down. And so I call that the squished M. And so you would look for a 78% retracement level as an area to go long and buy into this trade. And again, just using the 1 to 3 risk to reward ratio, you can look to take profits at the top here, or you probably get a 1 to 2 risk to reward ratio if you look to take profits at that high there. So there's the squished M. And then let me show you a bearish scenario. You're going to have a downtrend, and then prices will kind of come up and do something like this. And so right here is your 78% level. Okay, and I call this the grocery cart trade. The reason I call it the grocery cart trade is that, and then if you're from the southern U.S., you might call it the buggy trade, but you can kind of see this kind of looks like a grocery cart. If you put your wheels on here, it's a grocery cart, popping a wheelie, or maybe a bicycle popping a wheelie. But that's what it's going to look like on a chart, is it's going to look like a grocery cart popping a wheelie, and then I'll wait for this up move to make it to the 78% retracement of this leg right here, and then I'll look to go short. And again, easily get my 1 to 2, 1 to 3, possibly even a better risk to reward ratio, because I'm going to be placing my stop just above the high and then look to take profits down in this area. So that's how I use the Elliott wave in my trading, and I thank you for listening and allowing me to share with you one of my favorite trade ideas. I wish you the best of luck in your trading as well.